Good morning and welcome to Car Dealer Live. I'm James Baggett, I'm the founder of Car Dealer Magazine, and today we're talking to Daksh Gupta, Chief Executive of Marshall Motor Group. Good morning, Daksh, how are you?
Morning, James, how you doing?
Nice to see you, Daksh. So Daksh joins us today after an unscheduled announcement to the stock market this morning. It wasn't for bad reasons, it was for very good reasons. He's told investors that profit is going to be around £15 million for this year. After his previous update said that they would only break even. September sales performance has dramatically beaten the market. The group's going to be paying back a £10.9 million VAT bill 18 months early, but they are proposing to shut 4 dealerships, adding 2, and there's some consultations beginning with some staff over job losses. So we're going to cover all of that, but firstly, Daksh, that big number, £15 million, is a huge change from where it was in August. How have you done it?
Well, you could argue poor forecasting. I blame my CFO, Richard, for that one. No, I think when you see I'm sure you've seen the stock exchange announcement released this morning. When you actually look at the tables and the way it's been set out, you can clearly see it was all about September. I mean, we had a huge September. We announced our interims on the 18th of August. Clearly, September was always going to be the biggest month of the year, given what happened in March. So, from our perspective, it was the biggest month of the year, and quite frankly, across the board, we absolutely smashed it out of the park in terms of outperformance. So, we'll talk about the performance in a second, I guess, individually. But I think we also have to recognise this is as a result of some very unique sets of circumstances that are happening in the marketplace. We've seen huge pent-up demand as a result of the closure period, and we've also seen the impact of supply shortages having a significant tailwind in a number of areas. So clearly that's having positive downward pressure on the new car market, on used cars. We've seen used values rise month after month. So that's clearly having a positive impact on the business as well. We've got all of that tailwind helping through to after sales as well. So we've had a lot of help from the market. So we haven't suddenly turned into superstars overnight. But I think the thing that we can sort of say that we've contributed is the outperformance to the market, because everyone's had the benefit of these tailwinds. But I think when you look at the sort of operational performance, which is benchmarks the market, I think our people have got to take a lot of credit for. So if you look at some of those KPIs individually, they are particularly stunning.
The thing is, Daksh, a lot of people will be looking at these numbers. They would have looked at results that have come out from people like Virtue and Pendragon recently, and they will be asking what you're doing that is so special that you can achieve these huge rises.
Well, look, I think, I don't really want to comment about Virtue or Lookers, or Pendragon. We're all in the same space. We respect all of our peers. I think credit to the Virtue team. I think they put some stunning numbers out last week. But they've got different business, they've got different franchises, different geographies. So people will make comparisons. We understand that, but we're not going to make any wild claims. That's not our job to do that. We'll let people judge for themselves. I think one of the things in terms of our performance, which is what I'm here to talk about, is we're really pleased with them. I mean, double-digit performance across the board in September was just simply stunning. I think how we deliver that is a question I get asked a lot. I think there are a combination of things. I think one, we have a very stable management team. So I'm now my 13th year at Marshall. The executive committee, we've got sort of 45 years service between us. If you look at the franchise director, again, long service there. Our management turnover at senior level is very low. We've got fantastic support with our heads of function. We've got great technology in terms of our in-house developed system called Phoenix, which we've often talked about. We've got a great online presence in terms of our web presence with marshall.co.uk, our social media presence, which again you will have seen over the years. And I think we've got an amazing culture. During the last few weeks, we've had confirmed that we've been a great place to work status for 11 years in the bounce. And I'm pretty confident, given our results went +1, and we've seen that generally most companies have gone backwards during this period, that hopefully will be ranked for a 7th year in a row, which again is unprecedented. So I think the technology, the culture, the people, the stability, all of those things come together to deliver those stunning KPIs.
So Daksh, is it in any brands individually driving this huge growth? What are people out there buying at the moment?
I think a couple of brands in particular have performed very well. I think the Volkswagen Group franchises have performed well, particularly Audi and Volkswagen. But you know, I think we shouldn't just focus on one individual brand. I mean, let's talk about those KPIs in detail. We haven't talked about those. You know, new market was down 4.4%. We were up 18.4%. That's 22.8% ahead of the market. That's double digit ahead. That can't just be down to one individual brand. Clearly, we don't disclose our individual brand performances, but I can say that clearly, I think most people know that Volkswagen and Audi performed particularly strongly. But I think across the portfolio, the guys did an amazing job. You know, our new retail performance in a market that was down 1.1% was up 19.1%. So again, 20.2%, double digit again ahead of the market. And fleet, you know, fleet has struggled, I think it's fair to say, in recent months. The market was down 7.4%, but we were up 17.1%, so 24% ahead of the market there. Used was exceptional at 15.7%, like for like. You know, after sales really strong at 11.8%. So they were all like for like KPIs that I was quoting there. And I think the other benefit we've had as well in terms of driving that September PBT result was our acquisitions. You know, we bought 20 businesses last year. They've really kicked into performance this year. And again, when you look at some of the total numbers, I mean, our total new car sales were up 33%, and that's as a result of those acquisitions. So, so all of those things have really come into a sweet spot for us, and we've benefited from that.
I mean, they're very impressive numbers indeed, Dash. I mean, I'm sure you and the team are incredibly proud of those. The other things that I noticed in the announcement is you've still got a very strong cash position. You've paid back that VAT early. What was your thinking behind making that? I mean, that's nearly 11 million quid that's gone out of the bank. I mean, it's a big decision to take. Why did you do it?
I just felt it was the right thing to do. I mean, I think the government have been, you know, the buzzword is unprecedented, isn't it? I think the government have tried to support business as much as they can through, you know, job retention scheme, through schemes such as the VAT deferral payment scheme. So the VAT was not due to be paid back until March 2022, the final payment. Clearly, we've benefited for all of the reasons I've said in Q3 as a result of this pent-up demand. You know, which is a kind of not a normal situation. And I think it's not right that companies sit on some of this government support. Of course, if you need it, everybody understands that. You know, some companies are not in the fortunate position that we are. We were in a strong position, and the board took the decision, which was absolutely the right decision, to pay back that money back to the government, £10.9 million, 18 months early. So it was absolutely the right thing to do. And we felt as a good corporate citizen, it was the right thing to do.
I mean, that's it's certainly to be applauded. That, I mean, the other thing, Dash, is you've had a number of staff on furlough, didn't you? I think around 90% of your staff at one point was on the first scheme. You're going to be in line for quite a hefty job retention bonus in January. I'm not sure exactly what that figure will be, but I'm sure it's in the millions. Are you still going to take that money?
I think at this stage it's too early to make that decision. I mean, I think, you know, we have to remember, you know, what is happening in Q3 or since reopening. This is not normal. You know, doing these sort of numbers is not normal. We have to keep our feet very firmly to the ground. You know, yes, we've got a long track record of outperforming the market, and that's what we do. But these numbers are, you know, I think, you know, yes, the market is the market, and we've absolutely smashed it out of the park, and we've seized that opportunity. We've taken a positive approach to trading, but we also have to be very cognizant of the fact this is not a real market trading environment. They will stabilize. We will go back to normality at some point. As that supply to demand curve sort of goes the other way, what you're likely to start to see is volumes come under pressure, and therefore margins will come under pressure. So that's what we have to be very alive to. I think the other thing in terms of trading is we have to remember as well that some of this is driven by the new car dynamic as well. So, you know, pre-registration activity has been significantly lower than we've seen, which is why I think there's been this kind of disconnect. I think last week you covered the sort of SMMT story, and, you know, the SMMT were talking about, you know, a particularly challenging time, but they're looking at it from a manufacturer lens, not necessarily a retailer lens. So that's why there's a little bit of a disconnect between some of the data that's out there.
Yeah, because there will be people looking out into this industry and seeing one message coming from the industry trade body that says it's all doom and gloom, market's down, we need incentives, we need help. And then you've got retailers such as yourself, Robert, and others putting out statements that you're having an absolute boom time. I mean, that's very, very difficult picture to paint, isn't it? Especially to people that don't understand the automotive industry.
Yeah, but I think you have to remember the SMMT are an industry body that represent the manufacturers, not the retailers. Clearly, the FD represents the retailers. But as I keep saying, this has been a particular sweet spot, a unique set of circumstances that all come together. I mean, let's not forget, we did post a £9 million loss in the first half of the year. So, this is not because we've suddenly turned into, geniuses overnight. This is as a result of a unique set of circumstances. It's all to do with supply to demand that's helping us and all having a significant amount of tailwinds. And let's not forget, we've had a significant amount of government support as well to be able to deliver that result as well. So we should all keep our feet very firmly on the ground. I think the outlook clearly is uncertain, as we've put in the RNS. We've got a number of headwinds there potentially. So we've got Brexit out there. We will have all seen the statement from the Prime Minister last night, I'm sure. So there are lots of challenges out there. We've enjoyed those tailwinds. We've maximised that opportunity and we've benefited from that in Q3, as you can see, and that's resulted in that £15 million profit upgrade, which is great, and that will shore up our balance sheet. We've been responsible. We've paid the VAT back to HMRC, which is also great news as well. But I think we have to remember, what's potentially coming down the track, and that's one of the reasons why we've taken some of the decisions that we have.
There'll be a lot of people looking in as well at that pent-up demand, thinking that surely that was satisfied quite early on after lockdown. But what you're saying is that's continued well into September. How much longer do you think that is going to continue for, Dash? When can the industry satisfy that demand?
I think it's hard to say. I mean, that's the $1 million question, isn't it, James? And I think it's a really good question. I mean, I think my personal view is I think used cars will probably keep going through till Q2. So maybe springtime. I hope I'm right. I don't know. It's an anecdotal view, but I think when you think about that supply to demand dynamic, particularly on new, I think that will take some time to recover. So I expect used car values, and certainly some of the experts that you've had on are sort of talking about Q2 is when that sort of the residual value strengthening will continue through. So I hope used cars will carry on. But I think it's going to be hard to call. We've obviously got the MOT benefit coming through now as well. So all we can do is just keep concentrating on focus on beating the market, and that's what we'll do.
And you're quite famously been quoted as saying that a lot of revenge buying has come into play. Are you still a big believer in that? Do you still think people are out there kind of treating themselves after lockdown? And I mean, surely that is something that will continue with people not being able to go on holiday or spend their money in the pubs and restaurants now in the north.
I think that's right. I mean, I'll tell you a little story that happened to me yesterday. So my son's PCP is coming up for renewal next month. I'm struggling to get him a car. If I'm struggling to get him a car, then a lot of people will be really, really struggling to get him a car. And to his credit, he said to me, Dad, have you seen this car that I'm in now is retailing for £22,500? Is it worth seeing if we could buy this one? I mean, he's only done 4,500 miles and he was at university, so he didn't take his car to university. And so I got the settlement figure, and the settlement figure was £17,300. And ordinarily, when you're handing the car back, you would find it's there or thereabouts in terms of the residual value being equal to what the market value is. Well, that car's been valued at £19,750. So all of a sudden, we've got a £2,450 windfall that we didn't expect. So whereas we were budgeting for sort of 230, or great news, he's paying for it now because he's working. But whereas we were budgeting at £239 a month, actually, suddenly he's got this windfall of £2,500. He's now talking about, actually, he wants an electric car. So that money has helped him go and spend and buy a more expensive car. And we have seen a lot of that. I mean, I'm involved with Milton Keynes. I was talking to the guys there a week or so ago, and they were talking about a customer who always bought XC60s, but with the money they've saved up during the lockdown period, they've actually upgraded to an XC90. So there is a bit of that going on. It's always anecdotal. How do we know this is happening? It's difficult to get the real data, but there is a fair chunk of that. But as you said, you can't spend it on foreign holidays. You can't go out necessarily to places you want to go to. So I think people are generally saying that we're going to treat ourselves on one thing that we can do, which is buy a car. So long may that continue.
A little, excuse me, a little bit of detail on the dealership closures, if you may. You've announced 4 closures or potential closures as part of this announcement: Cambridge Hyundai, Bury St Edmunds Ford, Nebworth Vauxhall, and Paul Mercedes commercial vehicles. Can you just give me a little bit of the rationale behind, your reasoning for those? I mean, I know that 47.3 million turnover and a loss of 0.1 million for the company of those four businesses. What are your thoughts behind that, Dash?
Yeah, I mean, it's essentially some of the network rationalisation that has been going on, which we've all seen over many, many years. I think, you've covered it previously. It's well documented that both Vauxhall and Ford had announced network rationalisation strategies. I mean, Ford literally just before lockdown. Clearly, Bury St Edmunds is a smaller market. We as a group had made a significant investment in our Cambridge facility, so built a Ford store there with a significant investment. So it's just part of the network rationalisation that's been going on. So hence we've announced those proposed closures. Same with the situation with Nebworth. There's a retailer sort of 10 minutes away in Luton, doesn't need one in Nebworth, doesn't need one in Luton. And actually, whilst these proposed closures are always difficult for the people concerned, and from our perspective, we understand that network rationalisation is part of the evolution the industry is going through, and actually, longer term, it's the right thing to be able to protect the viability of more retailers. So we fully support the actions that the manufacturers are taking to do this. We think it's the right thing to do.
And there was, tell you at a dealership today there, Dash. There was also some jobs mentioned. I know you've worked incredibly hard to keep people in their positions throughout lockdown. Many other retailers have cut jobs, and I know you haven't. Do you know how many jobs are going to be at risk, and do you think you're going to be able to find those colleagues other jobs elsewhere?
Yeah, so it's a very small number, James. I mean, at the minute, we don't know the final number because we're clearly in consultation process, which is why we couldn't disclose that full number. I think, as we sort of spoke to you previously, there were two communities in particular that we did not bring back. One were collection and delivery drivers, and the other were apprentices. The apprentices and the collection delivery drivers were all around health and safety, because you take an apprentice, they have to be supervised directly. How can they work on a car and put themselves in a position of risk? So equally, we didn't want to put our technicians in a position of risk as well. So that's why we didn't bring them back. We are bringing all of our apprentices back because we think that's the right thing to do, on the basis that this is the population that have been affected most in terms of young people. So we think that's the right thing to support those. On collection and delivery, again, what we've seen is a lot of customers' attitudes towards having people in their cars is they don't want them in their cars. So since reopening, we haven't offered a collection delivery service. What we've been promoting instead has been while you wait servicing and other ways of helping the customer. And actually, that's driven a lot of efficiency and productivity gains within the organisation. I've been surprised, but there's been very, very little. I think I've only had 2 customers email me, and there were very specific circumstances where there was shielding, where customers could not, really needed us to offer that. So we are still offering collection delivery service, but on a much reduced offering. So it'll be the last thing that we offer. But I guess from our perspective, the end of the furlough scheme came in, was being announced. I mean, yes, there's a kind of furlough too, but we were not eligible to be able to participate in that. We left it for as long as possible. When you throw in the end of the furlough scheme, we couldn't claim the new furlough scheme. When you throw in the fact that the Prime Minister has said this virus is going to be with us until at least spring next year, and you look at the efficiencies and productivity gains it's done for our organisation as well, and the customer attitude towards collection delivery, we have made a decision to actually stop offering that service as a kind of first port of call. So it will be, as I said, relatively small numbers to the size of our organisation. Don't have the final numbers yet. But again, this is not a massive cost-saving exercise. It's actually been done more as a result of those items I've just talked about.
And lastly, Dash, you would have seen the announcement last night by the government about the new tiered restrictions. I mean, the north hit very heavily. Chances are that this coronavirus infection is drifting ever further southwards. What are your thoughts about those restrictions, and do you think it's going to have an impact on your business?
It's hard to say, isn't it? I mean, I'm not totally convinced it will have an impact on our business, on the basis that we've got 3 dealerships in Leicester, which was one of the first cities to be affected by sort of localized lockdowns. And yes, we did see a slight downward trend in terms of order take, but it was still up. It wasn't as up as the kind of double digit sort of order take that you've seen us talk about today in our RNS, but it was still up. So I'm not sure it's going to totally affect us. I think it's really hard to say. And I think what's more likely to affect us is a lot of the negative news flow that's out there. So be that on Brexit, be that on the end of the furlough scheme, job losses. So we're a great country at talking ourselves into a recession, aren't we? So I think that's more likely to cause more damage than actually any potential lockdown. I think we will get through this, as the Prime Minister said last night. Whether these local lockdowns will work or not, who knows? But I'm not totally sure it will necessarily totally affect us. I think what's more likely to impact us is those other headwinds around Brexit and around what will the economy look like post what may well be some significant job losses as a result of the end of the furlough scheme.
Dash, thank you very much for your time today. Congratulations to you and the team.
James, we didn't talk about the 2 new editions either, did we? Actually, thinking about
we didn't, but we've definitely covered that online. So if people are watching, they can go and watch that. They can go and check that online. Thank you ever so much for your time today. It's much appreciated, and congratulations to everyone.
Thanks, James.
Thank you. Great stuff. So thanks to Dash there for joining us for that Car Dealer Live. If you want more Car Dealer Lives like this one, log on to cardealermagazine.co.uk. Click on the live tab at the top of the page. I'll see you next time. Thanks for watching. Goodbye.